Okay, welcome back to all you Rain King members, and I also want to welcome those new viewers to this monthly public GMU update. As many of you know, I'm on vacation this week, and I'm putting this video out about 12:30-ish on Friday, October 4th. It was a pretty interesting week that's going on, and some subtleties that we'll talk about. All right, just remember that the presentation is made by Rain King LLC. All right, lots to go over today. We're going to talk a little bit more about the big picture, the secular bull. We'll get into the indices. We'll talk about all the news this week. In addition to that, we're going to do an update on talking about these 10% corrections and what could we expect and where we are. We'll go over a few watch list ideas, and then we'll wrap it all up for the weekend. Okay, let's start with the big picture. And this is really going to the secular bull market thesis. So this is a chart that I've used. I use it about every 6 months in these videos to kind of keep our mindset aware of the big picture. What we're trying to show here is these big super cycle bull markets. I'm showing here from the 1942 low all the way up to 1967. Then we went sideways for a good 15 years. And then we had the major low in 74, which started off really a new super cycle of 26 years, which took us from 82 to 2000. The market peaked with the dot-com bust, and we basically went about sideways for 15 to 16 years. The major low we had in 2009 was really the markings of the next super cycle that we've been in. And if you use roughly about a 26-year window, 25, 26 years, that would bring us, the super cycle should last somewhere until about 2035. And the point of the chart is we were kind of looking that we're approximately halfway through this using the S&P in terms of years. Still a long way to go here, probably a good decade ahead of us of gains. And running some simple calculations, it shows that maybe the S&P can actually still has a lot of meat on the bone, maybe another 150 to 200% potential. So it's important to kind of understand where we are, because we all tend to get zoomed in on the day-to-day. But we're in the middle of a super cycle with good trends. Now, putting these super cycle that we're in a little bit more in focus. I'm showing here a chart from 2022, and I'm kind of projecting all the way out to this 2035 theoretical target. So you can see here, we had the bear market in 2022. We've come out of that. We've had a leg up. And as of September of 2024, the S&P year to date is up over 20%. And, the drivers of this are, we've talked about it before, the real drivers are the millennials. The millennials, there's a good 84 million of them that have reached peak consumption years, peak earning years are coming, starting in 2019. That's the driver. And we have all of these interesting themes: artificial intelligence, robotics, personalized medicine. It goes on and on. And at the same time, we have the boomers retiring. So they're taking on more healthcare services, and there's going to be a lot of transfer of wealth to the millennials. That's the real big driver. So we're here. We know that there's going to be bear markets to get from point A to point B. But I think 2025 is setting up to be a very, very strong bull leg in this market. So we'll talk about that a little bit more in the video. But still, when we project out using those targets I had mentioned, 150% move from the June target was an S&P that reaches over 10,000. And if you had 200% move, would push us all the way up to 13,000 on the S&P. Sounds kind of improbable, but we are looking at almost a 10-year forecast. Okay, let's get into the indices and get a little bit more zoomed into what's been happening this week. So here's the NASDAQ composite on a daily chart. Try to keep this fairly simple. We've talked about the NASDAQ is not the stronger index right now. We had a very sharp sell-off, and we've really been trying to recover from that. And we have. You can kind of look at this as a little VCP pattern. The contractions, each pullback is getting shorter and shallower. You can see here that we're starting to build a little tighter consolidation. We're still below our highs, so we're lagging the other indexes, but it's a tighter consolidation. And this week we got some support at the 20-day, which I think was really encouraging that we didn't blow through that support. On the negative side, the NASDAQ has now gone back to a condition of net new lows. You can see here, this chart shows net new highs in green, and we've gotten some red bars, meaning we're in a net new lows. So that's not as strong as the other indexes. So let's take a look at the S&P. Okay, the S&P here, again, I cut this about a half an hour ago. The S&P broke to new highs a couple weeks ago, and now we've kind of pulled back in. Kind of not too bad, gently. We're still getting support here at the 20-day, so that's encouraging. But you can see here the net new highs are still continuing on the S&P. So it's really interesting that even though the market has paused and kind of gone sideways for 2 weeks, we're still in a net new high condition, which is a really good place to be. It's a strong condition. And you'll notice in this bottom tab, this is actually the accumulation distribution rating for the S&P. The black represents 1, which is kind of neutral. Once you get above 1, you're in a situation where accumulation is occurring. The blue line is actually 2.0. So even though there has been a lot of headlines this week, and we'll talk about them, you're seeing more accumulation going on during this pause. That is some built-up energy that hopefully will play out in the next few months. So here's the next topic. It's not the news, it's the reaction to the news. Now I'm zooming in here on the same S&P chart. This is actually cut as of last night. And the concept that we want to really keep in our minds is the market is a discounting mechanism. The market is always looking 6 to 9 months ahead. That's why sometimes the market reacts to things in a way that may seem confusing, but we really want to avoid the news, because if you look at it closely this week, there was a lot of news that really could have hit this market very, very hard. Now, to put it in context, we've had a rally off this low here, this swing low. We rallied about 6.7%. We had a little bit of a breakout, and now we've gone sideways and we've pulled in. Now, think about it. On Tuesday, we had Iran attack Israel, and we had a gap down that day, but we got some support. That was subtle, but that was kind of interesting to see. And the distribution we saw that day was actually pretty mild, as you can see in the lower volume bars. The next day, we had the vice president debate, and there was a lot of port strike worries. We had another gap down. And interesting here, again, we got support off the 20, and there's kind of this breakout level here. We got support. And if you looked at underneath the hood, the S&P, the up volume, was leading the down volume on that day by 1.3. So again, news headlines might have had you all worried and scared these 2 days, but the market really, really hung in there strong. I think these are subtle signs that there's just a lot of accumulation going. And then yesterday we had the ISM manufacturing report, which came stronger than expected, which provided some uncertainty about how the Fed deals with rate cuts, be it if they go slower or faster. But the important part is look how tight the range is. And again, it got support off the 20. So this is all kind of subtle. But when you see the market holding in there and gapping down and recovering, when you have kind of some fearful headlines, I think this is really, really a great sign for the market. And when you put inside of that the seasonality of late September and October typically being tough months for the market, I think this is all showing some real strength in the market that's building up. So if we turn a moment now to the American Association of Individual Investors, this is the sentiment survey of basically retail traders. Now you'll notice that on September 18th, that was the week that the Fed cut rates, and the bulls, in terms of the bullish sentiment, was at 51 almost. And that was really the peak. You can see here that I've shown the bulls are pulling in their horns the last couple of weeks. And part of that might be because of the news. There's a lot of, worrisome news about the Fed and the rate cuts. There's an election coming up. The port strike was hanging over, and certainly the Middle East uncertainty is something that could affect the market. And you can see that there's actually people at the retail level that are becoming less bullish. We'll see how that turns out. Generally, the crowd, retail traders tend to be wrong, but it's something to kind of just keep an eye on to see what their positioning is. Now I want to turn to revisiting the NASDAQ 10% corrections data that we reviewed, I don't know, 4, 5, 6 weeks ago, but wanted to do just a quick check-in on this. And to refresh people that may have not seen the last video, We looked at the NASDAQ's 10% corrections in the last 6 years, and I created this little table. Now, if I take out the complete bear markets, which are obviously deeper corrections, we looked at these five kind of corrections that were all over 10% in the NASDAQ, and we just looked at how long it took to recover to get to new highs. And, in August, we had that black swan event where we had a really harsh sell-off here. The NASDAQ was down off its highs by about 16%. So then we looked at some of these individual corrections to see what we could learn. And this is actually the September 2020 correction. We talked about how it took about 45 days for the index to reach up to new highs again. And you can see this one had about a 12.8% correction, and there was really a second wave down. But you'll notice this kind of contraction of the selling that occurred as the index tried to recover. It's not unlike what we're seeing right now. That's why I'm putting this one on the screen. The other ones didn't relate as directly. So that just showed us that maybe these things take time. And to try to put this in perspective, we looked at where we were back in late August, and we said, there's multiple scenarios. We said, are we going to race to new highs? Are we going to pause and digest? Or are we going to actually break down and have another double dip? So we seem to be kind of between the blue line and the red line. We had a little bit of a deeper second dip, but we've now come up and hovering near new highs. And we said if we looked at the average of some of these corrections, and we used about 48 days as the average of these, we said, somewhere around the middle of October is when the market might hit new highs in the NASDAQ if it were to follow some sort of relevance to previous corrections. There's nothing that's here as a prediction. This is just kind of giving us a guide, but we seem to be possible that by mid to late October, if the technology stocks get regrouped, we probably could go to new highs in the NASDAQ. Now let's go a little deeper on the NASDAQ. I just wanted to look at two periods. This is 1995 in the NASDAQ composite on the right. And this is a line chart. It's a weekly chart. And what I wanted to show was, the market, the NASDAQ specifically in 1994 went sideways. And I remember this because the Fed was raising rates throughout 1994. But right towards early 95 is when the Fed started cutting rates. And that really got the bull market going. And obviously the major theme that was going to play out for the next 5 years at least was the internet build out. You can see here, 95 was a great year for the market, 96. And then we started to have a couple corrections, but the trend was up. It was one of the most powerful 5-year windows in market history. So we look now to the left. I'm kind of looking through the 2022 bear market here, and we've been moving our way high. We've gotten to new highs, and now we're saying, okay, the Fed is starting to cut rates. And we have another major theme that'll probably play out over the next 10 to 15 years, and that's the AI theme. The build out is happening right now, the infrastructure for the AI build out. And we have the Fed cutting rates. So that's one of the reasons why I'm pretty optimistic on 2025. I think this could be a very powerful year in the secular bull market. A lot of energy, I think, has been building. And we still haven't seen small caps and mid caps really take the leadership role yet. So I think there's potential here. The other thing that is in the wings is there's over $6 trillion that was stuffed into money market funds. That money probably is going to come out of money market funds gradually as interest rates come down, and it's probably going to see a certain amount go to bonds and a certain amount go to equities. So that could be incredible fuel to push the market. So we'll see how it plays out, but some of the things are really starting to align. Breakouts, we've been tracking breakouts, watching this like a hawk. We're going to make sure that we're in the leading stocks. So we've been, ever since we got that follow through day in August, we've been plotting all of the different breakouts for some of the leading stocks, some of the great young IPO stocks for new merchandise. All the ones in green are new merchandise in the last 3 years, I believe it is. So you can see there's a lot of new stuff. Some of these symbols you might not even recognize, but new leadership is what really drives a bull market. We've had some more breakouts. The infrastructure stocks broke out. CEG is joined up with the breakout that occurred earlier in GEV. So there's a lot of stuff going on here, and you might want to look at these symbols and pause your video player and write these symbols down and take a look at these charts. All right, watch list ideas that are kind of on theme. Let's look at some of the strongest stocks in the market. Now, there are some opportunities. Now, all of these charts I'm going to show you are weekly charts. That's important. These are weekly candle charts. ServiceNow is a big stock that broke out of a base. And you can see here that it had a nice surge higher. We had some good volume on the breakout, but it's starting to ease back into the 10-week moving average line, which is in red. Typically, out of a base, the first trip to the 10-week moving average is an opportunity to potentially buy the stock if you didn't buy it earlier. So I think this is something to look for. You want to maybe keep your tabs on ServiceNow. Mercado Libre has had an incredibly strong breakout. You can see here 1, 2, 3, 4, 5, 6 weeks up in a row on big volume. And then the stock continued higher, even though the indexes were pulling back. In the last 2 weeks, we've seen Mercado Libre finally pull into the 10-week moving average, providing an opportunity to either add to a position or possibly initiate a position. I do have a position I will disclose in Mercado Libre, and I bought it off the 10-week line this week. Palantir is acting like a champ, a true leading stock, very strong price action. You can see here good volume that really is pushing this stock higher. After it got out of the breakout and came back to the pivot, where Rain King members were alerted to buy this if they felt it was comfortable for them. We were on this with members, and hopefully members are still in that trade and enjoying the gains in Palantir. Axon Enterprise, this is the taser gun, which is their primary product, but they've really been transitioning more to the cameras, the Axon cameras that law enforcement uses, and I believe they're really trying to push other uses for the Axon cameras. And it's really interesting. This has become, rather than a hardware company with cameras and taser guns, it's actually becoming an enterprise software company because of the amount of data and video that they collect and manage for law enforcement and their clients. It's becoming more of a software company, so that really is a different type of model. And you can see here, super strong breakout on earnings, low volume pullback, and then 4 weeks up in a row, very strong action in Axon. So that's something you might want to look at. It's extended here, but you might want to stalk it. Constellation Energy, this had a big gap up 3 weeks ago on the Microsoft deal to produce nuclear energy. I think it was a 20-year deal at the old 3 Mile Island plant. So this is powerful stuff. This is all about AI infrastructure and trying to do it in a more sustainable green way by using nuclear energy. And then Coherent has also been an extremely strong stock. You can see the volume had a very powerful breakout on this week right here, and we've had follow through. So we've got 4 weeks up in a row and Coherent. This one you might want to wait because it's extended to try and find it on a pullback. And this is the 10-week line here. I will disclose I have a position in Coherent. All right, so that's a lot of information. Let's try to wrap it all up. Where are we? Well, the S&P and the Dow are certainly stronger. They hit new highs before the NASDAQ, but tech is trying to rebuild itself. If it can get itself together, I still think the NASDAQ has the potential to break out in the next 2-3 weeks if the market holds together. The 20-day, it's been acting as support. So that's really good on both the indices. We're seeing support at the 20. The trend is certainly up. Now, we talked about the net new highs, new lows. The NYSE is still showing new highs, even with the market pausing. That's really, really good action, showing that under the surface, people are not dumping stocks in a big way. Now, we've got sectors and groups. We didn't talk about groups so much this week, but they're broadening. We're getting more broadening of the sectors amid all of these worrisome headlines about the Middle East and strikes and all kinds of stuff. So that's why we avoid the news. We really want to focus on the action of the stocks and how the market reacts to the news. Exposure levels, I've moved them up, I think 5% just gradually this week, and it really is a stock by stock basis. I have things at 70 to 85% exposure, depending on your level of comfort. But that's where I kind of see things right now. There are stocks that are pulling back in. So some of these leading stocks, as Mercado Libre and maybe ServiceNow and some others, might give you an opportunity to get in if you miss them. And I think other ones we're seeing are continuing to just be runaway stocks to new highs. That's the best situation. That's the true leaders of the market. They're not going to make it easy to get in there and get a piece of your position. So I have to keep your eye on them and find a way and a good sound strategy for entering those stocks. Again, don't chase extended stocks. That's just a quick way to overtrade and get stopped out. So you got to be disciplined here, as we always talk about. All right, the quote of the week is from Sir John Templeton, the founder of the Templeton Funds. His quote of the week is, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria." So this is what bull markets are all about. They usually start when everybody is really pessimistic. We come out of a bear market, and then they keep going up as gradually people start getting on board. And that keeps the bull market going for a number of years. And then eventually the greed takes over and euphoria, and that's usually when the market tops. So good overview. Consistently want to watch this secular bull trend unfold. Okay, a couple of announcements. Blue Sky 7. This is in the works, so I want you to hold the date. The date for this event is Saturday, November 9th. It's going to be a virtual online event, as we've done the last several years. So online registration will probably be opening about 2 weeks before the event, around October 25th. And I will be putting out on Twitter soon the list of all the speakers and topics, so you can see what the slate is for this year. I think we've got some really good things planned. So please just try to hold November 9th, a Saturday, if you're interested in the Blue Sky event. And lastly, I just want to remind people, if you haven't checked out Rain King Insights, my new website that launched this summer, just go there, take a look around, a lot of good material. And even if you don't become a member, just become a free member, and you can actually get access to a number of different content on the sites. Particularly, you can get my GMU Extra series, which are these short form videos that I do that are only 10 to 12 minutes about a specific trading topic. In August, we did selling on technicals. About a week ago, I released the 8-week hold rule, which I think was a really good one to review again on the details around the 8-week hold rule, because it sometimes is misunderstood. And I'll be putting out another one this week, and it's going to be called Woulda, Shoulda, Coulda. That video will be released tomorrow. So check the website and check on, it'll also be released. I'll put it out on Twitter with a link to my YouTube channel so you can get access to that. So I encourage you to take advantage of some of the free educational material. Okay, so that's a lot of information for Friday, October 4th. Enjoy the weekend. I'll be wrapping up my vacation, and we'll be back to work on all of this starting on Monday. Take care, everyone.